All right, now requirement D, using Exhibit 5, explain the ethical issues and other audit in planning implications which arise in relation to the phone call from the company's CFO, Chief Finance Officer, Mark Yoke, right? And 10 marks means a maximum of 10 points. Let us move to the relevant exhibit. And here we go. Note from a phone call yesterday between Harvey Reber's audit engagement partner and Mark Yoke. Pale company publishes a wide range of non-financial, social, and environmental key performance indicators as part of annual report, including the three shown as part of Exhibit 4. Mark has asked if our firm can provide assurance on these KPIs as part of performing the annual audit. Mark has suggested in order to pay for this extra work, mm, the agreed audit fee will be necessary by 20%. So it will create self-interest threat, self-review threat, right? Also, Mark informed us that a news report has emerged in Finland alleging that the Pale company paid a government official a sum of 15,000 in order to secure the purchase of tropical rainforest, which will take place next month. Mark wanted to make us aware of the story, which is spreading quickly on social media, and to inform us that these incentives payments are routine business practice in Finland. He also strongly urges not to investigate the payment as part of our audit procedures, saying that the amount is significant. He suggested that making inquiries regarding the payment might mean more media attention is focused on the issue, which he is keen to avoid, given the company's plan to obtain a stock market listing within the next 2 years. Anything else? Nothing. So move on. Now we have the D part, and it is ethical issues. So assurance. First point is assurance on key performance indicators known as KPIs. And what we will say, there are several issues to consider with regard to providing this service. This service. So further, what we will say, said that a significant issue is relating to the auditor objectivity. The KPIs include financial and non-financial metrics, which includes revenue, operating profit, and profit before tax, which is extracted from or reconciled to statement of financial position. KPIs are not a form of part of financial statements, but they will be published in annual report, right? So, and therefore, they are the part of financial statements. Sorry, other information. Right. There is therefore a self-reviewing threat to objectivity in that the audit firm has been asked to provide assurance these KPIs, which would be read by the audit team as part of their other information. The team would be reluctant to raise queries or highlight errors which may have been made during the external audit. When reading other information. So far, so good. Now, the IESBA Code of Ethics provides guidance when auditors provide additional services to an audit client, chief and co needs to evaluate the significance of the audit of the threat and consider whether any safeguard can reduce the threat to an acceptable level. For example, the independent partner should be involved in reviewing the audit work performed. Now further, we will discuss regarding the incentive payment. So what we will say regarding the incentive payment now? Markio has suggested that incentive payment routine, but it uh, but it could be against the law. The incentive payments could raises the concerns that the concerns company may not be compliant with the relevant law and regulations. The incentive payment could be a bribe, and an illegal payment. If so, this indicates a lack of integrity of management as Mark clearly knows about it and seems to be justifying it. Okay. Auditor needs to consider requirement of ISA 250, which states that while it is responsibility ensure that the entity operations are concluded are conducted in accordance with the provisions of laws and regulations. And auditors some responsibility regarding the laws and regulations, especially where non-compliance is occurred. So, so far we get 7 marks. Therefore, auditors should ensure that they have full knowledge of laws and regulations, and the implications of non-compliance. As a 250 states that when non-compliance is identified or suspected, auditor shall obtain an understanding nature of the circumstances in which it has occurred. And further information to evaluate the possible effect on the financial statements. 8 marks. Now, next paragraph. Therefore, procedures should be uh, performed, obtain evidence about the evaluate the possible effects on the financial statements. Therefore, procedures should be performed, obtain evidence about the evaluate about the suspected non-compliance, non-compliance. For example, in any documentation which may exist support Mark York claim that the payment is in the normal course of business. So that's it. That's how you should write the answer for this part of the question, and see you in the next session.